Why are angel investors so greedy that they won't even consider investing in a company unless they can get 20 times or more their money in return? Hi, I'm Lance, and welcome to Feel the Boot. A lot of startup companies that I talk to are surprised to discover that the angel investors they're pitching expect to hear that they can make at least 20 times their money from this investment. And to a lot of these people, that seems ridiculous. That seems like an incredibly greedy demand to make. Why do you need such an enormous return from my poor little company? Why do you need such a big piece of the company for the money you're putting in? And the problem is, while it's great to make 20 times my money on a successful company, the sad truth is most companies aren't successful, especially at this early seed level. Most of the companies that I look at, and even the ones I choose to invest in, are not going to be a big win for me. In fact, most of the statistics around angel investing show that around about 50% of the companies we invest in return nothing. They fail completely, roll up their carpets and move on to start another company, and we get zero back. Another fairly substantial chunk of the companies we invest in will return some of the money we invested in, up to the amount we invested in. So it's not a total loss, but we still lost money on the deal. Then a few deals might make a couple times their money, 3, 5 times back, and then there might be 1 in 10, 1 in 20 that will actually return more than 20 times my original investment. And in general, as an angel investor, while I certainly have sparkles in my eye at the idea of finding a unicorn and making billions of dollars off my small initial investment, really, it doesn't come into the math at all. Right? The odds of that are so vanishingly small, it's effectively like buying a lottery ticket. And most of us don't try to build our retirement plans on lottery tickets. It's just not a successful strategy. But the angel investor is looking at this statistically. They're not thinking of the investment in your company as the only investment they're ever going to make. So they understand that they need to make lots and lots of investments over an extended period of time, because many of them will fail, some of them will succeed. So to get an average return on my money that is even comparable to the stock market, those few that succeed have to be able to succeed big. I need to be able to make a ton of money off the few successes I might see over dozens of investments to make up for the dozens of companies that returned me absolutely nothing. And the other thing to remember is time scale. A lot of people are looking at, in the stock market, you're maybe making 5 to 10% returns in the market, and that seems pretty good. That's 5 to 10% per year. Whereas many of the investments I'm making as an angel aren't going to see any kind of return for 5 to 10 years. Very often I hear the entrepreneur claiming that I'll see an exit in 3 to 5 years. My experience is that it's more like 7 to 12 most of the time. These things take much longer than we like to think. The business plan, and no one's trying to lie about this, but the business plans are a work of fiction. And we all know that. But entrepreneurs tend to be optimistic about how things are going to go, even when they say they're being conservative. And that's particularly true about timing. How long it will take to find that product market match, how long it'll take for virality to take off, how awareness will spike, how easy it will be to get PR. All of those tend to be optimistic. Now, we as investors know that your projections are not going to be accurate. In fact, the only thing we know about your projections is that they are inaccurate. There's no way that your predictions that you're making at this very early seed stage of your company are actually going to give the correct numbers. You're very likely to be low. You're very likely to be high in the numbers you project and that the real numbers will be lower. There's a chance that you'll radically underestimate your numbers and in fact you're going to be, the next unicorn and things will be exploding. Either way, the numbers you projected are probably not correct. So what I want to see is that it is possible to return that kind of money. I need to see a path that seems plausible to me that following the plan you're laying out, you can get to a likely exit point that will return to me at least 20 times my money. Ideally, substantially more, but that's kind of the minimum baseline. If you can't show a path that says, getting a reasonable fraction of this market that I can clearly define and you can convince me is something that you can realistically go after, if you can't make that case that if you get that, you will then be worth 20 times what you're worth when I invest, I can't make it work for me, right? As it is, with the numbers we're looking at, we're talking about something like 5% return for most investors, right? Even at 20x over 10 years, I'm only making 30% a year on that one investment. And again, that sounds like a pretty good return in the stock market, but that's the one successful investment that needs to offset all of the others. So it's important to understand the psychology of the angel investor and understand that this is not some crazy demand or a wish to be made rich by every company he talks to, but rather it is dealing with that statistical reality of just how brutal the startup market is. And that most of the investments he makes, most of the bets he makes are going to be losers. And he needs to be able to make lots and lots of those to have a reasonable chance of getting enough successes and enough big enough successes to outweigh that and make this actually a money-making operation as a whole, because none of us are in this just to lose money. That, again, is not a very good retirement strategy. So I hope this has been useful. I hope you've learned something about the psychology of angel investors. And until next time, ciao! Thanks for listening to this episode of Feel the Boot. If you enjoyed it, please click the like button. And if you want to hear more of this kind of content, click the subscribe and then hit the bell to be notified when new content is uploaded. I'll be uploading new videos and blogs every other week. And please, go down to the comments and let me know what other kind of content or questions you'd like me to address in future videos. Thanks!